Well, good afternoon once again. It's good to see so many people here for these afternoon sessions. Look, this afternoon and this morning we've talked a lot about technological change, global uncertainty, and I think everyone here will agree that the finance, banking, and private equity sectors are not immune from any of that. So this afternoon, we're going to try to answer this key question: how to future-proof the finance, banking, and private equity matrix, and what can leaders do to help maintain the growth, but also stay relevant and forward-thinking. We have two great panelists. We enjoyed some conversation ahead of time. First, let me introduce Chen. He is the General Manager and Head of Strategic Development at Fosun International. And our other colleague, Dr. Guang Yang, Vice Chairman of the CTH Group and Atlas Technology. Thank you to you both. I think we're going to have a real interesting conversation. Alan, I'm going to start with you. When we talk about the future and future-proofing, obviously there are some great tools. There is great data. There is great analytics. There is great technology. We have AI, we have blockchain. There are all of these new advances. With all of that on the table, I'm still wondering, how much of a role does basic common sense, basic just gut instinct play in future-proofing these financial sectors?
Thanks, Mark. This is a great question. I've been in the private equity investment career for over 20 years. So I would say basic instinct, people judgment, will never be faded out, will always be a very important factor in terms of decision making when you come to investment. But I think AI does provide a very, very powerful tool. For example, 10 years ago, if I want to look into healthcare industry, my analyst will probably take overnight or a day to come back with a summary of the technology, latest development. But with the help of AI, for example, ChatGPT, an in-depth analysis or research report can be generated in 10 minutes' time. So that certainly shortened the time you spend in terms of understanding the sector and industry, which is extremely helpful. So I always hold the view that common sense has become common sense because of the availability of the data. And AI certainly contributes a lot of that.
And this is a competitive global environment. So these issues of time and analysis do matter. It's not an option to wait a day or two.
Exactly.
These are decisions that have to be made in just hours.
Yes, exactly. So that helps very much. And I think the other development we see is private equity has always been an illiquid asset class, which is different from the stocks traded on an exchange. But now we start to see more and more tokenized assets, which definitely helps to improve the liquidity of the private equity asset class, which is a fantastic improvement or progress we've seen so far.
Sure. Dr. Yang, both you and Alan have very traditional beginnings in the finance sector. Yet, right now, you could argue we are seeing a bit of a revolution. I'm wondering, from your experience in the past and now in the present and future, are we seeing as monumental of a shift as it seems?
Yes, absolutely. I think AI and blockchain are two most powerful tools right now that's going to disrupt everything, right? Like you mentioned, I come from traditional finance, traditional asset management business. I used to run a big asset manager listed on NYSE. But going forward, I think if you look one by one, all the financial institutions, their current business model will be disrupted. Let's start with banking, right? Like commercial banking. Their main function right now is just handle payment. But their payments process is so costly that basically leads to the failure of Silicon Valley Bank, right? Because compared to blockchain, it's very cheap to move money around. So we really see the tokens, the coins, stable coins, is going to completely change the commercial banking industry as a result. We just launched our own stable coin. It's called the Word USD. And tomorrow my partner will talk about more on the coin. But we can go down the list, like a traditional asset manager will be disrupted, even stock exchange probably will be disrupted. You can see one day there will be just one marketplace for everyone. You can trade 24/7, so you don't have to worry about liquidity in regional markets.
When you are talking to different clients, different banks, different financial institutions, what is the one question or questions that they ask you? Where is their concern about the emergence of this technology in future decision making?
Yeah, of course, like many panelists mentioned about this before, the ethics, the security breach, identity theft, right? Especially if the decision is made by AI versus human. But that's where I think the blockchain can really help, right? If AI can sound like you, talk like you, write like you, look like you, your digital identity become most critical part of the whole thing. And that's what blockchain can offer you, the solution.
Right. We were talking, there is still a human aspect to this, a human factor, I think you were alluding to. So we need to have a skilled workforce that is able to implement and develop. Do you feel that that framework, that base work is in place, or is this something that the business community needs to get together and make sure that educational institutions are able to support?
Yeah, I'll start. I think that definitely makes sense. It is progressing at the moment. And I think in the future, if I look at junior talent to enter into this industry, I think a good judgment, always remain curious about the new knowledge, new sectors are always important, as before. But I think on top of that, the skill set in terms of using the AI as a tool to improve the efficiency is very, very, very important. For example, if two candidates in front of me, they have the similar, judgment capability, but one is versed in ChatGPT, generative AI, or even can program to serve the specific task, I will have no doubt to hand over my offer letter to him first, or her. So that also requires the educational institutions to adapt to this and to provide more professional talents with skill set both in their judgment as financial skills, as well as the AI and AI skill set. Mm-hmm. So that's very, very important to us.
Dr. Yang, you talked about the stable coin and some of the tools that you have been advocating and helping to develop. There's been a lot of discussion this morning and this afternoon about emerging markets and developing nations. So that leads me to a question about accessibility. All of this technology, we know it's beneficial and we know it's the future, but it's only beneficial if it has broad accessibility. So how do you make it more tangible to parts of the world that have economic ambitions but just may not be able to access these different instruments?
Yeah, I mean, again, I think blockchain can offer that solution. And traditionally, some folks in the emerging markets may not have access to traditional bank service. But everybody now can have their digital wallet, and they can move money around and buy coins, and pay whoever they need to pay at a very cheap price, almost costs nothing. So I think the technology will bring down the barrier and allow people in the emerging markets to have the same access that people enjoy in the developed market. Mm-hmm, mm-hmm.
I would also like to add on that point. I totally agree with Dr. Yang that if you look at the technology impact on traditional banking services, it does improve the accessibility to the poor and in the rural. If you look at the data between 2011 to 2021, in the 10 years, the banking account owner has grown by 50%. Most of them are in the mobile banking area. Having said that, we still have about 1.9 billion people in the world who doesn't have access to any payment system. So I think AI and technology in broader sense does improve the accessibility to the people. But also having said that, I think we still have the young, the older, who may not be a skilled user of smartphones. So I think AI still needs to improve and becoming more and more easy for people to have access. For example, instead of typing your instructions, maybe you can do it in voice. That will make a lot of people's life easier. So I think that will probably be the next step to disrupt the traditional financial sector.
Well, we talk about disruption, and that kind of leads me to my next question. What's not being done that needs to be the priority, let's say 5 years ahead and even a decade ahead?
Good question. I think we're still far behind in terms of adopting the AI technology in the traditional financial services sector. And what we fall more behind is probably the regulatory side, such as how the KYC rules will adapt to the new norm, how to regulate the transactions, and how to prevent from the financial risks where you see pretty mature system is already in place for the traditional transaction manner, but not in AI yet. So I think on that side, regulators need to do more.
Mm-hmm. Yeah, let me just add that. I think we are still way behind in terms of how much computation power we need going forward, which leads to how much power we need, right? People talking about blockchain consumes a lot of power, but AI is going to consume probably more. So therefore, we as a society are still very much behind in terms of building enough data centers, building enough power generation capacities, especially the renewable energies. In that space, we really look at the solar, wind, plus battery, right? So therefore, people are now really fully understand how much lithium we need going forward. So to make that whole thing work, there are a lot of work need to be done.
Right, we have all of this innovation, but then there's also this question about, as you rightly said, about regulation. I guess what I'm wondering is how do you regulate these, I mean, they're almost nebulous concepts, because what may be acceptable in Asia may not necessarily be acceptable in North America. I mean, if we look to Europe, for example, the tech regulations there are much more stringent than other parts of the world. So how do you establish a regulatory framework with so much development so quickly? Is that possible?
I don't think so. I think it will be really hard. Actually, recently I participated in an AI/regulatory panel in Silicon Valley, and Congressman Ted Lieu was the first one introduced the AI bill, and he is the only Stanford-educated computer scientist in Congress. There are only like 4 of them has a CS degree. So I asked him, how can 4 of you write something to regulate millions of entrepreneurs, AI scientists? There is no way. So I think the only thing the regulator can do is probably education, right? Like make sure you label this product is generated by AI, not by human. But try to have regulators ahead of the entrepreneurs and engineers. I think it's impossible.
I mean, I think as we know, AI, as much as we want to believe in it, I mean, there will be examples where its flaws become present, and people will demand some kind of regulation. I mean, that just seems to be inevitable.
Yeah, and I think this is a very good question. It's a challenging reality, which requires a global coordination. You mentioned Europe, US, and China. I think one example we could refer to is almost over 90% of central banks in the world are researching and developing digital currency. So that's one way to sort of coordinate in terms of the digital currency on the digital currency front. And also, I think the communication and discussion about the common issues faced by the regulators are very important. So such mechanism should be established so that people could, I agree with Dr. Yang, it is difficult to think ahead and get everything written in a rule, but it's never too late when the issue comes out and regulators discuss and come out something to prevent that from happening again. And thirdly, I think there are some basic rules which proves to be sound in the traditional financial sector, such as the rule for KYC. These kind of things, I think it should be rolled out and discussed among regulators to apply in the new form of digital trading, at least for certain restricted transactions. That's the minimum, in my opinion.
We have just a few minutes left, so I want to ask you both the same question to conclude, and I'll start with you, Dr. Yang. Obviously, we've talked so much about technology and AI as far as future-proofing finance, future-proofing private equity. Is there something else that needs to be brought on the table that we've not mentioned that also is important in these in this future-proofing effort?
Yeah, I think that really get into the almost like philosophical level of question, right? The technology will help level the playing field and make it more democratic, remove the middleman, so to speak. That would include politicians themselves, right? If you think about the congressman, congresswoman, they're the middlemen. And today you can easily go to the individuals for whatever political decisions. But we know that's difficult because we're up to the Congress to decide what can be done, what cannot be done. But hopefully with the continued development of technology, people finally will realize, we are moving to a very decentralized world.
Right. Beyond technology in the 1 minute we have left, is there something that also needs to be discussed about future-proofing?
Yeah, I would say I would be a little bit more pragmatic. I think the theme of this FII Priority in Hong Kong is the impact on humanity. So people talk a lot about sustainability, ESG, but when you discuss that, you normally detach that with the financial sector and the investment, because people tend to think that's non-profit, has nothing to do with return. Where, in my opinion, in the next 10 years, it shouldn't be the boundary or barrier between the two. The private equity sector should be motivated, incentivized to be actively involved in the ESG investment. I think a lot of investors and regulators start to do that already. I would love to see more and more in the future.
AI, blockchain, have such a profound impact in every aspect of our life, from financial security to how we order food. So thank you both for a very fascinating conversation. There's so much more to come on this.
Right.
Appreciate it.
Thank
you very much.
Thank you, Marc.